following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everybody. This is the 28th of January, and welcome. Monday through Friday, market days. This is where you'll get the Tiger Technicians Hour. This is where I'm at. And, of course, my daily services, the opening call goes out early in the morning. I start sending off my charts. Start off with this chart right here. Let me just get it right here. This is the Dow chart with commentary, and then underneath it I have right here this, the quintiles of the 120-minute Dow made a peak D at 17,840, trying to form some kind of a base above 17,280 to 17,240. And you've got the VIX index, which made right now a leg B at 18.45. The VIX index is actually up 93 cents, up 5.4%. That is a pretty darn big number for a market where the Dow is up 17 at 17,404. And this is interesting. And you've got the S&P UNCH at 2,029. Fascinating that today you've actually got the Dow strong because of Boeing, of course, than the S&P. This is, and right here you've got the short-term trading index. It hit 216 today. This is a very interesting phenomenon. There's the daily and the Dow and the daily S&P. So the daily Dow is just touching that trend line, but the S&P hasn't come close to it yet, and that would mean that let me just move that up here, make another little trend line so you know exactly what I'm looking at here. So if the S&P takes out by the end of the day after the Fed meeting and Fed announcement of the minutes, it's at 2028, down 61 cents. If it takes out 2019, that would be 9 points lower. That would be about 100 Dow points. Couple of things would be happening. Be very negative on the Dow, start to become negative on the S&P, and what we'd be looking at is that it would be saying that the VIX rallying like this is actually a heads up to say, be careful. The volatility index is up for a reason. It isn't just insurance. Okay, now let's get out of the way of these things. You've got the E-minis down 7 at 2023. There are two competing chart formations here in the daily. Let me open. This is the one on the left right here. You've got the arch formation, which has been pretty strong because you've even got lower highs since the peak A at 2026 in the E-mini. But you've only got one low, and that low is higher than all the previous ones. So far, it's kind of a good sign. Any close below 2013 on the E-minis, very negative. But it's really the weekly chart that is totally fascinating to me because it still is implying that there should be a higher high to come in the S&P, both the cash and the futures. So how do I put this together? Well, if you go back to my Chapman Wave trend gauge, it's suggesting that within 2 sessions, we've already actually done the one because it flashed yesterday to suggest that within 2 sessions, this particular indicator has over a 96, 98% accuracy rate. It suggests that within 2 sessions, there should be a sharp rally off the low. In this case, the low was at 2013. What you've had, and usually it means at least 7 to 9 points on the upside in the futures. And that would imply that in the cash, there'd be some catch-up. Well, there was, in a sense, because the futures went all the way to 2046. If ever there was a 9-point rally, that was it. I mean, that's 33-point rally in the E-minis. They gave a huge chunk back, and they've come back down. And this candle here has a characteristic of a Chapman Wave Roman candle. It isn't quite So I want to put it in into the sub category, and just say that there's a chance that if we continue running, what is it, 11:15 Eastern time right now, if we continue through 2:15, 2:35. In this range, that's going to be pretty negative, and say there's a good chance we're going to take out yesterday's low of 2013 on the E-mini. But it's really this weekly chart. Look at this on the S&P, SPX.X. It is still very strongly suggestive of internal, just enough internal strength to push it a tad higher. But all of that will just go out the window if on Friday at 4 o'clock there is a close below 2001. That's about 300 Dow points down, 28 S&P points down. And you never can tell. Things are moving very quickly now. Every day we've had at least a 200-point move up or down, and sometimes both ways. Here's a 120-minute chart, made a peaky. Let me put my down arrow over there. And now we're consolidating. And by the time the Fed comes out, and I'd say by 2:45, 3 o'clock, if the E-minis are not in the 20, close to 2037, wow, that's 9 points higher. Yep, close to 2037, there is really going to be some kind of a problem. I might have to just put it aside that there's going to be a rally. Now, there's some sectors, for instance, no, let me just finish the numbers here. IWM had been very good. It made a leg C today, a very quick A to B to C, but very strong move from the peak A to the peak B and then leg C. And it's suggesting quite strongly here that the IWM, which had been strong, and it seemed not to be interfered with at all by the dollar currency, the impact that it's had on many of the Dow stocks, certainly, that it was independently going its way, and that if it could get to this red dashed line in the weekly chart, which takes it to about 120, it's at 117.67, and it can do that within the next few days, that would be very positive. On the downside, a close below 116.80. That's 80 cents lower than where it is now, would be very negative. If you look at the QQQ, which were really helped by the Apple announcement earlier on, and now failing with this big gap down from yesterday and today, try to fill some of it. That resistance line, look how beautiful. You know, when you learn how to draw these resistance lines and support lines and the cup formation, the arch formation. Look, I drew this quite a while ago, and I showed that there was a very strong resistance line. And every time that the QQQ series, that's the ProShares QQQ Trust Series 1, has gone, this is a trading vehicle for the NDX 100, has rallied, it has been repelled at that dashed gray line. And that dashed gray line is now formidable. It's going to suggest to me very strongly that unless the QQQ series can get over 104.75, and it needs to do it by a week from today, today Wednesday, yeah, a week from today at the latest. It's not good action so far. The other thing is this Apple, which spiked higher. I've got this, it is still under the peak G-top in the weekly, which is really an alternate count, but at 119.75. Whoops, let me move this 120-minute chart out the way. And it's at peak D in the monthly, and it's underneath the previous 119.75 peak D high in the daily. So this could all be rally failure mode. I should put it in gray because that's what we always do when you're underneath previous, a previous major peak. And have a look at this. Peak A, why did I do that? Sorry, this should be B. This is actually leg C. There's a good chance that Apple has the strength to maybe go to the C, but it really needs to do that by about Friday or Monday at the latest. And it certainly it cannot. It's at 115.68, had a high of 118.12. That's $1.50 less than the all-time high. No, the last high, which was that the all-time 119.75? Yep, the all-time high. And so this is a very important period all the way around because VIX.X, the VIX, hasn't done anything spectacular, but it is rallying above the 200-period exponential moving average. And I'm just going to have to set aside this whole thing about the weekly charts having to go to a higher high to complete their moves, because all I can tell you is if the VIX continues to rally, and let's put this into perspective, in the XL XLK, I believe that's it. XLK. Yep. The SPDR. This is the S&P Select Tech SPDR Fund. This is just a series of. This is what I call a high-level consolidation, but within a top that could turn out to be a fairly serious major top in the, and a lot of it has to do with IBM, I'm sure, but in the S&P Select Tech SPDR Fund, trading at 40.38, up 29 cents. Now look at this. You've got, the pattern that I always talk about, the lowercase h that goes to an M. Oh, there it is. Lowercase h goes to these patterns are just, they repeat over and over. Why? Because they're fractals of human nature. And as they repeat, they form these patterns that make breaking out or down quite formidable, meaning that when they finally do break one way or the other, in this case, it would mean that the XLK would have to break sharply above, close above 42.40 to challenge the all-time high of 42.58. And if it breaks down underneath this low bar, let's go to the low bar, the most important low bar, would be around about 39.84, 39.83. It says 39.30 is the 200-period moving average. You could get there very quickly. So I'm not sure what the Fed is able to say. Oh, let's do another one here, because I discussed this with Tom last night, and it's the IBB. The IBB is the iShares NASDAQ Biotech ETF, and with Amgen still to come yesterday, and two more coming today or tomorrow. I went out on a limb with my subscribers, and I said we were right there. And I said there's a good chance we might go slightly higher to a D after this double top peak C1, C2 in the 120-minute chart. But if it turns out to be a D, and now, even though it's intraday, because the MACD and stochastic have turned down on this 120-minute bar, I can put a down arrow. My suggestion was that this could be a bit of a reversal right here. I remember getting some emails saying, this is still so strong. What's going on? What are you thinking? Well, what I was thinking was that almost all the earnings had come out. That I was looking at the on-balance volume turning down. The MACD was still very good. The stochastic hadn't turned down. It was at 92%. But that 120-minute chart suggested from the action and the reaction that if there was a pullback in the IBB, it could be the foreteller of a rotation that's going on, where the very best of the best start to pull back. And then we will have to see, and I discussed this with just didn't discuss it, I mentioned to my subscribers this morning, why is a USX acting so well? I mean, these are the late heavy-duty cyclicals. Why isn't Alcoa acting so well? What's going on here? And that's part of the rotation. I'll be back. We'll talk a little bit more about it. Basil Chapman, Tiger Technicians Hour. We'll talk about gold, the dollar, etc.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. I had a couple of questions. Let me just deal with this right now. I wanted to finish up because the IBB has been exactly the area that fund managers have been rewarded for years. It's not just a year. It's not just 2 years. It's really years. We have whenever they've grabbed the IBB or the BBH, that's the biotech sector ETFs, they've just been rewarded with all-time highs every time. In fact, it's as if you could buy it today at highs, almost all-time highs, and be guaranteed that within a week you'd be making money again. Less than that, usually it's hours. However, my thinking here is that this is really the shot across the bow. We had one in October, 22% decline. We were very lucky to be able to be in the right position there when it came down. However, now we're looking at something else. Now there's a certain maturity in the chart formations. And even though I could have an alternate count in the weekly chart, I could be calling it A, B, C, D, E, F, G/C. Everything about it says that it looks like it's a C. And all I'm expecting is that there could be just a pullback here towards the 318 area. I said last night 321 to when I was interviewed by Tom, 321 to 318 really is the area of key support, maybe even 316s. How it handles that's going to be very important. If it takes a whole week and it's underneath it, it means that we could get peak C next week with the high being 329.20 on the IBB. And then for whatever reason, you get that sudden rogue wave, that sudden isolated spike to the upside, and the bar that takes out the high, let's call it 329.20 for argument's sake, takes it out, is also the very bar that closes sharply below. It hangs around above it just long enough to get more people going back long. You get the shorts covering, and at the very bar pulls back, and that gives you your leg D. And finally, the IBB, and I'm suspecting that this coming quarter, we're in the quarter right now, January. The February, March, certainly going into March, is where the IBB suffers its most damage. That's what I'm thinking. Am I right? I don't know, because the long-term chart of the IBB looks great. I mean, the MACD is rising, the stochastics are 93%. This could go on for another 3 to 5 weeks. And the stochastic in the weekly chart is at 91. So this is really just a starter feeler position to kind of get some sense of what one would think if it was going to go down, how it's going to go down, and where the support level would be, and if by Friday at 4 o'clock, there's a bounce back to 325 that's saying, hey, this is just a temporary pullback. And maybe we get a fuzzy week next week, but there should still be at least one higher high to come in the weekly chart. That's after the peak is made at peak C. So you need one full week of a lower high. And that would be very important. Okay, so then we got a couple of questions here. The question was, let's see, how's it phrased? Rephrase of question. Would you short DEC or GMCR or hold off on both? You see, what happens is when you get this very sharp pullback from a top, in this case a double top in DEC, which is Decker's Outdoor Core, made a high of, a high of 99.80 back in September, and then it pulled back a little bit, walked the 9-period moving average, and then went to 99.88. So 99.88 is 8 cents higher, so that's an E. As I'm looking at it now, it's suggesting in many ways that through the weekly chart and through the monthly chart, that the top, maybe even a hat-trick top, is in. We won't know for sure. January's not finished, got another couple of days. However, that's the way it's looking at this particular point. But there is a counter-trend bounce. And DEC's counter-trend bounce says you made a peak D top in the daily after the Chapman wave stalk leg formation. And then you pull back from that 99.88 high, all-time high on the 12th of December. And you had one single leg A up and you failed. And now you've got a leg B to the upside. And it's holding at the 9-period exponential moving average. My thinking here is that there isn't much left between 82.51, where it is right now at the 9-period moving average, and 84.08 to 87.15. Well, 87.15 is 5 points higher at the 200-period moving average. I don't think it's going to get there. From the way it's looking, it looks like 84.50 to maybe 85.20 would be the level to be watching. So I think that both DEC, DECK, trading at 82.51, up $1.51, and GMCR are in the camp that says to me, what happened to my notation on GMCR? Not here. Well, GMCR is very close to the 200-period exponential moving average at 126.30. It's at 127.11. So the best time to have shorted it was as it broke the 9-period moving average on the 26th of January, because you had a nice cushion of that 9 EM average. So I'll tell you what, we've got a break coming up. I'll do a quick analysis over the break, but I also want you to look at the XLE for Will. A good question about it and the waveform, etc. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So it's mentioned in the Dan who said that. Let me just see. Oops, a lot of information. Let me just find that. DEC reports, I think DEC reports tomorrow, says Piggy. Okay. Well, I'm done with all that guessing and everything. It sometimes worked out fantastic, sometimes it didn't. I used to try to guess from the chart formation that we're looking at. But it's really the market's two things. It's the market's response to the earnings, and it's the outlook. So the conference call could make a big change in what was said. I mean, that's what happened with DuPont, right? Not DuPont, I'm talking about UTX. So I'm inclined to say everything about it says that it should go lower. I would probably say also that I'd be prepared to wait. I don't want to be trapped in the correct position if it gaps up and then within a week it's way down again. So I would just hold off. And all I could say is that if it gaps down, that's great. Now you know that every time it rallies, you can short it because it's going to go lower. GMCR is almost the same thing. GMCR risk reward right now says that there's support maybe 3 or 4 points lower, but there could quite easily be a 3 to 4 point bounce. I don't like that. That's not a risk reward to me. I'd rather have the information, and if it gaps up, I'll reassess, and then I'll say, hey, now's the time to short. Perfect time, because you know that your upside could be limited to just a 1.5 or 2 above the bounce. So I'm going to just hold off if you don't mind. if there was no earnings, and sometimes I do this, I've done this with my subscribers. I ignore the fact that there's an earnings announcement. We did that with GE. We had GE, and there was an earnings announcement. It was basically a positive one. So I will do that periodically. Ignore an upcoming call about either a report or a news event. But in this case, because it's been down so much, it's very easy for it to pop up overnight. Maybe even by the morning, it gives it all up. So I'm going to say I'm holding off my biases on both of them to look to the downside. That's all. And make it real easy. And then you can make up your own mind. So here we go. And I used to be able to do this. I would do it either with an option. For instance, GMCR looks to me like it really wants to go to the 122, 118 area. Well, you could ignore anything that's happening and you could just buy yourself a put, but I would go further out. I wouldn't go to February. I'd go to March, something like March or April. And I'd actually try to get it not out the money. I'd keep it kind of closer. You're not going to make as much money, but you're playing the right trend. It's an inexpensive way to play the trend. All right. Now, let me just go to a couple of things here. XLE, I promised that, Will, that I would get to it during the show. The XLE is at a very, very nice. This is the S&P Select Energy Fund. It's trading from the low that it made at 71.70 just on the 14th of January. 71, did I say 41? I think I said 71.40. Excuse me. And was that a high there? 75.33, 75.36. No. So this is really a peak A that was made yesterday because today is much lower. I can't see it breaking above 78.09. Today it's at 76.22, down $1.49. After such a big move from 71 to the 78s, a 10% move, you can expect, especially off a low, you can very easily expect a 30 to a 50% decline. But this is different. Why? Because for the first time, you're getting a positive divergence in the weekly, and the daily has also given you a positive divergence. But it didn't break above the high of 81, round number, on the 29th of December in this move. Not yet. So this is what I'm thinking. Remember the pattern we just looked at? I was looking at GMCR, and the pattern I said those lowercase h's can go to a lowercase m, and then just m, and then just continue over and over and over again. Well, here's the same sort of thing. So I'm anticipating that the energy sector has made a low. Whether it is the low, I don't think so. I think it's an internal low. Later on, we will get the residual low, and that can sometimes take 6 to 8 weeks to do. So there could be a bounce around here. Did I get a high volume? Yep, I got a high volume low. No, I didn't. I was hoping for that. That one should have worked. Let's see. 1, 2, 3, 5, 7, 8, 9, 10, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 35, 37. Yeah. This internal low right there, what I call a high volume spike low, that allowed you to have those 28 days of upside movement before retesting the low of 77.51. That's the low of the 15th of October. You did not get that on the, you just missed it by a day. The next day had the high volume, so you didn't get it here. That means that's fine. You can retest the low. And we did get a mini. So that says if it's only a mini, I don't, my technique, the Chapman wave technique of the high volume, low price spike, it doesn't work here. So this is a different pattern. I have to use the 120-minute chart, and that 120-minute chart went to peak A, B, C, D, A, B, C, D, right at the 200-period exponential moving average, where it turned around sharply from 78.09. Okay. So here's my assessment. I think that the XLE is in a position where if you want to buy it and treat it only as a trade, and every time it makes 6% or 8%, you just get out of it, I think this is the time. So let me just quickly do this before we go to our next call, our first caller. And I'm going to say, I'm going to suggest that in the, it's a 76.08, in the 75.50 to 75.20 area. That's where your risk reward is best. And if you're going to buy it, I would have the 30 cent, I'd have a 40-cent stop. I'd have it tight as a 0.5%. That's what we've been dealing with the last couple of days. Really tight stops. I don't mind getting stopped out for tiny little losses as long as the momentum on the upside or downside on the other stocks are moving well. So this is what I'm going to say. You could nibble around about the 75, 50-ish, maybe a little lower area, but make it a fairly tight stop because from the 120-minute chart and the daily, it better very quickly start to get back to 77.14 or higher. That's a point higher than where it is right now. So, and I would treat it only as a trade. I don't see it as a major buy at all. So that's the XLE. And the weekly chart, so this is peak A may be made now. This is a brand new leg A in the weekly chart. It's got to climb over 78.33 above the 9-period moving average. Let's go to Brent in Martinez, California. Brent, how are you?
I'm doing very well, Basil. How are you today?
I'm well, thank you. And I have to congratulate you. You took a position yesterday in USX, and we discussed it. And I said, it better, on the short term, it better move really quickly because it's had a tremendous decline all the way from the 45s or the 40 area down to the 20. And lo and behold, today it's up at 24.31, up $3, 14%. Fantastic. Congratulations.
Thank you. I didn't realize, I looked this morning, there's actually a very large short position in it. It's like 26% of the float, which I'm sure is helping.
I think there's something else there. I don't know what it is, but it looks to me more than just...
It was earnings this morning helped.
Oh, did they have earnings this morning?
Yeah.
I should have kept up with that. Oh, wow. Your timing was perfect. And it's not that. It's holding the gap. You see, Apple, on the other hand, it's given back a huge chunk of the gap. It gapped up to, it opens at 117.63, closed yesterday around about, oh my goodness, closed yesterday at 109, gaps up this morning to the 118s and is trading out 116.34, giving back quite a bit. So your particular stock, and this is what I was talking about. I don't understand it, and it's one of the reasons why we're long some of these cyclicals, because, or what I call late cyclicals, and it's because something's going on. This is the latter part of the bull move, and that's where you usually get these cyclicals starting to move. So this is fabulous, but that's not why you called. You called about something else, correct?
Yeah, I had emailed you about this particular stock, which I bought at 32, and I've already closed out most of my position, 80%, CLR.
Okay, let me just tell the folks, hold on, it's Continental Resources, Inc. And, I looked at this, and I didn't realize that it was you that had emailed me, because I did answer, and I said it needs to get, and it looked to me like it needs to get to the 44, 45s quite quickly. And then it could pull back, because if it dropped from that level below the 9-period moving average, below 42-ish, I think at the time it was about 42. 18, that would signal that it's having a tough time, and it did exactly that. It went in the 120-minute chart. It extended. We're looking at CLR trading at 43.49 down 229. But yesterday, this is a Continental Resources. I mean, when I looked at it, I thought, why is this acting so differently? But you had also mentioned a dividend. What dividend is that?
That was the other one I emailed you about, SFL, which is a shipping stock.
Oh, okay. All right. In my mind, I was saying to myself, right, if this has got a dividend that's so good and it's doing so well, that is very unusual. I'm usually very, 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 very suspicious of very high-yielding stocks in a market like this, because invariably they cut the dividend or they just... something happens to the stock. It just they're doing something wrong to be giving that kind of dividend, and it's costing them too much money. So okay, so now you've taken some off, and you still have your core position. Is that correct?
Oh, I just have a small position, because my question was that if it closes here today, that would be peak C in the daily. Is that correct? Correct.
Exactly. So, folks, here we are. We've got a parallel wave count. Now, this is something that we're going to see. This is a really good test case. In the Chapman wave methodology is a technique that I use. It's called the overlapping wave, and it's in Chapter 16, Slide 317 of my CD introducing the Chapman wave methodology book. And in this particular instance, what we're looking at from the low that was made on December the 16th at 30.06, it has a great move, goes leg A, leg B, and then it stalls at the 21-period moving average at 40.63. And what does it do? It pulls back quite sharply. It goes down to 32.51. Then it starts another move to the upside, which is also a peak A. I usually call that gray A. I was doing a quick work there, so I didn't. But that should be an A and then a B. Actually, I'm dying to see here on the chart whether you see it. Let me just move this over here. Did that change to a lighter color? I hope so. I'm going to check it out in a minute. Yep, I'm watching it as I'm talking right there. The B lighter. Yeah, okay. So you can see that. And then that's called an overlapping wave. Usually it comes at a C, and then you get an A and a B and a C. And then what happens on the left side, when it takes that C out, it goes sharply to a D, and then it retraces to the lip. Now, this is different because this is a B, which means that the parallel wave count kicked in the moment it went to 40.63. That's what's called an overlapping wave peak C, and invariably it will go to a D. This is going to be the big test because it's a resource stock. It's above the 9-period exponential moving average in the weekly. It's got tremendous resistance at 46.76. I'm going to suggest to you, based on what I'm looking at here, that within the next today's Wednesday, you got Thursday, you got Friday, by Tuesday at 1 o'clock, there's a really good chance that if it doesn't break under 42.15, there's a good chance you will start to get leg C above 46.19. And if that's the case, this dashed line is really what we're looking at as resistance. I might be wrong about that. Maybe I should let it touch, and that'll make it somewhere around 47. But at this particular point, the action today is fine. It's just one day after 1, 2, 3, 4, 5 green candles. Actually, 6 out of 7 days it has 6 green candles and one little doji. And it's perfectly normal for it to have a peak in the 120-minute chart and a peak in the daily for peak C. I think you've got your eye on the prize here. But here's the big thing. This is going to be another test. Is Continental Resources going to fill the gap from the 28th of November, the high of round number 46, and the low the previous session on the 26th with a low of 51.05. So that's a 5-point gap. If it does that, it means that this is going to be one of those great examples where you look back and you say, gosh, that gap to the downside was so scary, and then it kept going lower. And what very often happens is that gap becomes an upside target. And if it clears it, you have to look for the left side peak, and that I don't want to get too carried away, and that would be at 58.48. I don't want to get carried away. I just want to say to you that I think it's going to make a leg D, and I think that's your question, right?
Exactly.
Okay, and then when it gets to a D, I would just be raising my stop on that position. Now, do you add on the position to get from this 43-ish area to 46.19, you want to get to 46.20? Well, that's 2 points. That's about a 5% rally. So my suggestion is, let's see how the 120-minute chart acts. If it really finds good support on the candle low of 42.57, that's a little low than I'd like to see. But if it holds that and then starts to make a cup formation, you could have a little position that you put there and see if you can get yourself a trade for leg D.
Yeah, I'm just going to, if it can make the leg D, I'll just close my position at that point.
Okay, well, you've been trading it. You see, the stochastic is at 92%. That, to me, is really important, and the MACD is good. So, absolutely. Hey, nice position and great trade on USX. Hey, nice calls. Thank you very much, Basil. My listeners are really thankful to you, Grant. Not to me, to you. Thank you for calling. Folks, the Dow's at 58, S&P's up 2.5. We'll be right back, and we'll talk about the Fed decision as soon as we get back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Folks, we're back. So we're looking at the TLT because I said that I would finish some of these other indices a little later. So here we are. And in the let me just quickly check this out here. First of all, yeah, that's good. So in the TLT, we're making a possible peak E because with the Fed coming out at 2 o'clock, 2:30, we don't know how the bonds are going to respond. But as it stands right now, we're a little bit toppy with the leg E in the weekly chart, a massive leg D in the monthly chart. And look at this. This is really spectacular. Look at that beautiful cup formation. And invariably with the cup, this is Chapman Wave Cup and Ladle, where you break out from the left side high of 132.21 made back in 2012. That invariably says that in D or E, you're going to come back and retest the lip, which is at 132.21, and probably go below it. Well, we'll see when that happens. But in the meantime, back at the ranch, the weekly chart MACD's very good, and stochastics at 92% on balance, volume still rallying. So it's really the daily that's going to give us this information. And my suspicion is that if the TLT, Lehman 20-year T-bond fund, starts to slide below 133.87, it's at 134.97, up 40 cents right now. Yesterday's high was the recovery high of 136.13. If it starts to take out 133 to 132 support over the next week and a half, then you've got to watch that low of 132.28, because we fulfilled the leg, the body, and we've got a little bit of a neck there. This is a Chapman wave stalk leg formation. It could go higher, but I'm saying all the requirements have been fulfilled, and the MACD is just turning down. Stochastic still at 81%, but it's much lower than it was. So you've got a negative divergence. So I'm going to be watching this real closely together with the dollar. The dollar DXY has made a peak E in the daily, a peak D possibly in the weekly if there's no new high above 95.48, and a huge leg up in the monthly chart. Now, what's really important about all of this is that if the dollar starts to pull back, and if bonds start to pull back, and if gold, which is holding so nicely here, starts to have a little bit more of a sideways consolidation, will the general stock market, which has really been buoyed as they've all gone together, I'm not saying there's even a relationship, the only relationship is that they've all gone up together, do they start to all come down together for a period? So with that in mind, with Larry Pesavento coming up, who's going to give you even clearer parameters to look at, I'm just going to say, for me, a close below 17,288 is a warning, but a close below Dow 17,243, especially 17,200, is a heads up to say, you're not making that leg D in the Dow in the weekly chart at this time. We're going to have to do a lot more backing and filling. That's number one. And anytime by Tuesday or Wednesday of next week, the Dow happens to have held all these positions and is trading above 17,580. I'd really have to say 17,630, 200 points above from where we are right now. I'd be happy. The other thing is, this is what we're looking at. VIX. Remember this VIX index? Don't dismiss it. It is really important. It's trading at 17.99. If the volatility index on Friday for the weekly chart closes anywhere above 19.38, somewhere into the high 19s into the low 20s, it's a heads up to say the pressure on the downside is unfolding and that the bias is going to be to the downside. If, on the other hand, because of what the Fed does or whatever it is, the VIX starts to slide under today's low of 16.92 and closes Friday in the 16s or the 15s, I don't know if I can do that, that's a very positive thing. Says, hey, you have a chance to get that leg D in the weekly chart. Those are the parameters. But isolated cases, we are long and we are short, and I that's fine with me. And everything we've tried to buy, I've made the tightest stuff even less than 0.5%, because I'm either going to be perfectly right or I don't want any part of it. Hey, folks, stay tuned for Larry and all the program today, and I'll be back tomorrow. Have a great day. Check out my opening call to get 2 weeks free. I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.